Hello traders, Gary Wagner here just before 10:30 in Honolulu, 4:30 in New York. It is Wednesday, first day of June 2016, and we are looking at the Dow Jones Industrial Average, which has settled in essence unchanged, up 0.01%, 17,789. That is the effective close. We are once again very close to flirting with those historical highs. On the Dow Jones Industrial, not so much, but the S&P, as you can see, this being the E-mini, is just 2 points shy of that elusive 2100, up 3 points today at 2098, high 2099.25, and the low on the day is 2083.25. That low is important because we talked about the possibility of catching this market dipping to about 2080 and then implementing a long position. We'll absolutely cover that on today's report. Dollar showing a little bit of weakness on the day, 95.42, putting it off about 0.5%, and crude oil in essence unchanged, but trading up about 14 cents, but below 50 cents at 49.23. Interesting day in U.S. equities with nominal closes, but closes to the upside in U.S. equities. As I said, Standard & Poor's 500, this of course is a daily chart of the E-mini, closing up about 2 points on the day, or 0.1% in terms of the upside move. If you recall from yesterday's show, we talked about the fact that we could in fact see this market possibly dip as low as about 2080, which would be a beautiful sense of timing to actually go in and to enter a long position. We came close to that today, coming to about 2083. We are closing slightly inside of the trading range yesterday, higher on the day. And when we compare this to recent activity, it is a small body size that tells me we are absolutely consolidating as we approach this elusive 2100 on the S&P. A breakout above that, and especially a close above this particular price point, will signal a buy also, as well as if we were had we been able to, I should say, buy that dip at about 2080. I certainly have no problems buying new highs in the market if we believe that the market's going to go to a new all-time high. And as you know, I am on record under that belief that we will see U.S. equities really move to the upside with a price point never seen. In other words, a new historical high, a record high in U.S. equities. We are on vigil or watch to enter the Standard & Poor's 500 from the long side. It is just a matter of timing. Similar to the current gold position that we're working with, we want this market to have the proper timing. Dollar index giving back a little bit of the substantial move we have seen, and traders realize that once this market on an intraday basis, this of course is a daily chart, hit these lows below 92, with a fever, this market has moved up, giving up very, very little. And you can really see that here. You spike, very, very shallow decline. You spike, small consolidation here, spikes up higher. Again, very, very small consolidation, spikes up. Again, small consolidation. That tells me that there's a real possibility that this will continue to move higher. Obviously, this is under the pretext that we will see an interest rate hike this month, being the first day of June, and that is really what has been fueling the dollar index to move to higher ground. Traders, we are looking at a daily chart. This is crude oil, in essence, unchanged on the day, 48.87. That is our current print. However, we're not getting that true relationship because our dailies haven't updated. Let's go ahead and kind of change that. This will reflect our current oil price, and there's absolutely no doubt we have some real resistance. I'll move it back to our daily because our intraday will not give us the same depth of range or the same time sequence, but we can see this price point at 50. Let's go ahead and put it back to our daily, but we can see this price point at 50 absolutely being a level in which we're going to find some real resistance. I thought it would be around 48. That was incorrect. 50 seems to be the mark, and I absolutely expect this market to trade under some pressure. I think that we have some headwinds here at $50 a barrel. I think that these headwinds, at least for the short term, will not be such that it will be overcome. When we look at our short-term channel, you can see we're at the bottom end of this channel, and what we really need to confirm that is a break below this particular channel. Traders, we are looking to initiate a long position in the S&P, whether it breaks above and forms new high, or if we get that dip that I'm hoping we get to get a better price point. It's simply a matter of timing. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.